Good evening, folks. Welcome. Some British pounds chat, the daily chat. So we'll be looking at price action, how price have been trading this week, and anticipating a price movement in the future. Here is daily chart, that is daily time frame. So each candle you see here represents a day. Today being Thursday, today is Thursday, Wednesday, Tuesday, the Monday candle. If you watch closely, you could see a volume imbalance, a gap, that's a void, an inefficiency in the market. That's between this candle, the other block, the high of it, and this bearish candle, the low of it. Between the low of the bearish candle and the high of this bullish candle, you could see a void, a gap, that is a space. It's an inefficiency. On Monday, we trade above it, price trade above it and close and stand on it. I have violated it. Here is the consequent encroachment, the half of it. You can use your Fibonacci to measure that. You anchor from the high of the bearish candle to the from the low of the bearish candle to the high of the bullish candle to get your 50%. That's a consequent encroachment. Price trading above it and standing on above it, above the volume imbalance. You could see a rejection block. It's an all rejection block showing that here is a major resistance coming on Monday candle, this Monday candle, 17th March. Trade above it and stand, that you have violated the volume imbalance. So price coming, retesting, redelivering inside it again will now act as a discount area, no more a premium area, because price have violated it and stand above it. And we have an inefficiency here resting above. That's CB, sell side imbalance, buy side inefficiency. This is algorithmic trading. So price you trade from discount to premium. Here is a premium resting above. As price have violated the volume imbalance on Monday, this Monday candle, it now acts as a discount area. So we're looking at coming weeks, price delivery inside the CB, that is a premium. Here is a premium now. Why the volume imbalance is acting as a discount area. You could see the consequent encroachment acting as a major support level. Here price delivered to at the consequent encroachment. Then anticipating a price delivery inside this daily BC here. Volume imbalance high, the volume imbalance low, the consequent encroachment, which is the 50% of this void, as a gap and inefficiency. Move down to 4 hour. That is 4 hour chart, the 4 hour time frame. You could see a price delivery inside this inefficiency over here. There's an inefficiency, that's fair value gap. We change the color. That's BC, buy side inefficiency, sell side imbalance. Have to learn that. Note that BC, buy side inefficiency, sell side imbalance. You see a delivery inside it on Monday. That's Sunday opening. Delivered, taking out the low by body. The body will tell you the narrative, why the weak will do the damage. That we trade above all-time high, above the high. Price created another fair value gap This is a fair value gap too. That's Monday fair value gap. There's Monday candle, 17th March. Monday fair value gap. We see a redelivery inside it. The week we do the damage, reaching out forth at the daily consequent encroachment of the volume imbalance. This volume imbalance high, volume imbalance low for the daily time frame. We have a breaker here. Here is a breaker block, the up close candle, a low, high, then lower low on Sunday opening, taking out the high. That's displacement. That displacement. The candle will now turn as a breaker. It's a breaker block. You see the body, we tell you the narrative, taking out the lows here. The sell side liquidity is resting below here, still inside the fair value gap, still inside this Monday fair value gap. The BC, that's fair value gap, resting above, which we are anticipating price delivery going into Friday. Today is Thursday, Friday towards next week. So we could see a price delivery inside this daily BC resting above here. Here is a daily premium, daily premium. So price is trading from discount. Here the volume imbalance, since we have price have violated it and trade above it and stand, you now act as a discount area, that's support area. So what price is going to do is algorithmic trading. It will seek for a premium above that's inefficiency above it. That's what price will do, from discount to premium, from premium to discount, then from liquidity to liquidity, from inefficiency to inefficiency. It's algorithmic trading. It's 4-hour trading. Price deliver inside the Monday fair value gap. Fair value gap, BC. Buy side inefficiency, sell side imbalance. The consequent encroachment of the volume imbalance, the daily volume imbalance. You see the price reaction there. You could see the price reaction, the week reaching out forth at the consequent encroachment. The consequent encroachment is acting as a major support level here. It's acting as a major support level. So anticipating price trading up, you have a buy side liquidity here racing above. That's a buy side liquidity. The previous high, the last up close candle, that's a buy side liquidity. The high over there, the bullish candle, the high of that week, that's a buy side liquidity. Watch the candle, watch below the screen, that's on Wednesday high. This Wednesday high, buy side liquidity. Then Wednesday low have been taken, that's previous day low. So the algo will seek for the previous day high, which is this buy side liquidity resting above. Price have taken out the lows here by body and with wick. To get a 50% of it, that's the consequent encroachment of it. You anchor from the low of this week to the high of this bullish candle, the week there. The blue line there, over there, that's our 50%. That's a 50% Fibonacci level. That's the blue line. A 50%, you can then remove your Fibonacci, then annotate it. That's the consequent encroachment, the 50% of the fair value gap. As a consequent encroachment. We would like to see price trade above the consequent encroachment and close above. Then we wait for a price action. We could see a little consolidation here before moving up to the buy side liquidity. You have to wait for a displacement here on 4-hour chart. You have to wait for a displacement. You have patience. That patience is your power. You have patience to wait for, if you are trading the 4-hour, you have patience to wait for a displacement. Then we like to see price trade above this consequent encroachment, then close above it. Then this is our target, the buy side liquidity. That's the previous day high. Since the previous day low has been taken, that's the Wednesday, today being Thursday, the low of Wednesday being taken. So the algo we see for the previous day high, that's Wednesday. Look at the below my screen, that's the Wednesday low. This candle over here, Tuesday low. Price took out Tuesday low high. Wednesday took out Tuesday high. Then went to Tuesday low. Taking out the Wednesday low, price will seek for the Wednesday previous day high. Today is Thursday. So going into Friday, then next week, we're anticipating price delivery inside this premium over here. That's CB. Sell side imbalance, buy side inefficiency. That's the daily premium fair value gap. Go down to 1 hour. You see a 1 hour chart, 1 hour time frame. Here in 1 hour, you could see inversion. That is inversion fair value gap. It's a high probability between this candle up here and this down bearish close candle. That's an inversion fair value gap. Inversion fair value gap. A very clear high probability. So if you wait for price to trade at the 50%, then you can buy. Measure, you anchor from the low, from the high of this bearish candle, the last down close candle there, to this small bullish candle there. So once price trade above it, you have traded above it, that's a break canal. You have traded above it, you see price have break above it, that's a displacement. Market shifting structure. Then is there any fair value gap? Yes, inversion. You anchor from the high of this to the low of this at the consequent encroachment of the inversion. That's where price delivered at. That's where price delivered. You can see that over here you can buy and put your stop loss here. Then take profit at the previous day high. Target, that's previous day high. Previous day high, buy side liquidity. That's an inversion fair value gap. That's close candle acting as other block. If you are bullish, We are looking at every last close candle stand as an order block. Order block. Last close candle, order block, break of structure. After taking a sell side liquidity, swept all the liquidity here, then a break of structure over there. The body will tell you the narrative. The body took out this high here. That's the previous high. The bullish candle there, the small bullish candle. We are checking it. That's a break of structure displacement. After a displacement, look for a fair value gap or inversion. In this case, we have inversion here. This is the inversion here. That's the inversion between this bearish candle, the high, and this bullish candle here, the low of it. That's inversion. Price have violated it. That's CB. But price violated it, trade and stand above it. Coming to it again, that's delivering into it again as inversion. Going to the consequent encroachment, which is the 50% of the inversion, acts as a major support level. That's discount area now. Price will go for premium, discount to premium. That's a consequent encroachment. Yeah, the consequent encroachment. Can remove the Fibonacci. Trading from liquidity to liquidity. The liquidity resting below here, all of it have been taken, have been swept. You can see the low have been swept, and we have a displacement. That's a market shifting structure. A market shifting structure there. You can see the high there, the small bullish candle there. Then the body will tell you the narrative. So we like to see price close at the consequent encroachment of this inversion. Then you buy, put your stop loss below here, then take profit at the previous day high. That's Wednesday high. Going into Friday, we like to see a price delivery inside this daily CB, sell side inefficiency, buy side imbalance. So if you want to pyramid and enter this trade, you use your, that's how you trade. Your profit there. Then your stop loss. Yeah. Your stop loss below here. So we are risking 1:2. That's a nice trade. As a nice trade, you can enter there. Then you take profit at the previous day high. Your stop loss below here. Take profit previous day high. Since the previous day low, liquidity, sell side liquidity has swept. So you enter at this inversion fair value gap right there. Just 1%. Buy. It's buy, yeah. Your stop loss there. Then you take profit at the previous day high. At the previous day high there. Then you set it like that, you leave it, let it play out. No emotions at all attached. Just allow it to play out. We enter at the inversion, consequent encroachment at the inversion after a displacement. Price have taken the liquidity. So what price we do next is seek for the next draw on liquidity. The next draw on liquidity above here is buy side liquidity, and the buy side liquidity resting above is previous day high. Since the sell side liquidity of the previous day low, which is Wednesday, today being Thursday, the sell side has been taken. So the algo will engineer price going into take the previous day high, which is the buy side liquidity resting above here. So we enter at the inversion fair value gap. Assuming we have a fair value gap here, it will be another case, but it's still acting as the same as inversion. Since there is inversion here, okay, you can enter, then target the high, that's the buy side liquidity resting above. Then you put your stop loss below the other block. They are over there. Then coming week, we have our daily. This is the daily premium, with the daily CB, sell side imbalance, buy side inefficiency. So we are anticipating price delivery inside this consequent encroachment here of the daily consequent encroachment CB. That is 1 hour. Go down to 15 minutes. That is on 15 minutes. The buy side above there, that's the previous day high. We clear up this. Done. Clear up this. Clear up this. This 1 hour other block. That's 1 hour other block. 1 hour other block. Our targets above there. Now our stop loss below here. 1:2 risk reward. If you miss it, you lose $83. Then if you win $133. It's a nice trade. 1:2 risk reward. Well, thank you for watching. God bless you. Thank you. You see the price is moving in our own direction. It's moving in our direction. We have another block. It's other block. Last close candle. If we are bullish, we are looking at every last close candle. This low is lower than this. This took out this. Then up there, this is a breaker. Low, high, lower low. Okay. Low, the bearish candle there. Then the bullish candle is high. It closed above, while bearish candle closed below. That's why it's low. Then bullish candle high, close above. Another bearish candle that follows up, close down. Low, high, lower low. Then the bullish candle that trade above and close above this previous bullish candle, making this bullish candle here a breaker block. To get the 50% of this breaker block, use your Fibonacci as your Fibonacci retracement. You anchor from the body, where the body open, not the wick, where the body open to where the body close. The blue line, that's our 50%, the consequent encroachment of this breaker block. That's the consequent encroachment of the breaker block there. Okay, let's use that color. That's the breaker block, 50%, the consequent encroachment. That's the half of the breaker. Half of this breaker. This is a breaker block. Low, higher low, higher low. If we are bullish, we are looking at every last bearish close candle to stand as an order block. Note that as an order block. So we like to see price run over here to take this high here. Take this high. We have an inefficiency here, then trade above it and close. And we act as an inversion too. Once price trade above it and close, going to act as an inversion. For now, CB. CB. Once price close, trade and close above it. Utilize this as an inversion, fair value gap. Then targeting the previous day high, previous day low, taking that's Wednesday being yesterday, today being Thursday. Wednesday, look at it below my screen. Wednesday low, Wednesday low. That is the Wednesday low. Wednesday low. I'm taking as well the low of it. That previous day low. Swell. So price will seek for the previous day high, which is the buy side liquidity resting above here. We have a breaker here, the yellow line. So our breaker block the 50%, which is this bullish candle here. That's a bullish candle there. If we are bullish, we are looking at every last close candle. Low, higher low, higher low. Note that. Once price trade above this CP here, we like to see it trade and close above. Then utilize this CP as an inversion, fair value gap. The price will seek for the previous day low. Since the previous day, price will seek for the previous day high. Since the previous day being Wednesday low, that be swept. That's the previous day low. Wednesday low have been swept. So the algo will engineer price going to deliver at the previous day high, which is the buy side liquidity resting above here. So you study your price action very well. You can see price is what price is doing here. It will take in time. That's why you need to develop patience. You have to have patience in this field. Patience is your power. So you have to have patience to wait for your trade. Once you are in a trade, once you click the button, you have patience to wait for it to play out. And when you are in profit, always take something out. You readjust your stop loss. The market can go against you. Yeah, it can go against you. You are not going to be 100% sure. Even your strategy is not 100% sure. It can still go against you before going to your direction. So that's why you need to cut your loose short, okay, and let the rest run out. So thank you for watching. God bless you. Wish you success. Have a wonderful evening and be safe.